Hey everyone, welcome back to Corporate Decoder. Today, RPAY just filed an 8K explaining outcomes from their annual meeting, and I am seeing a key approval that impacts their long-term incentive plans. Quick note, this is not financial advice, just my take on public filings for educational purposes. The big news is that shareholders rubber stamped a new incentive plan that significantly expands the number of shares available for future grants, which could mean more stock-based compensation for employees and executives. Report of current events for Repay Holdings Corporation, filed on the 10th of June 2026. This filing essentially tells us what happened at their recent shareholder meeting. Repay Holdings Corporation, also known as RPAY, is a technology and software infrastructure company. They operate in the payments processing space. Let's talk about what is actually being traded. RPAY has Class A common stock listed on the NASDAQ under the symbol RPAY. They also have something called preferred stock purchase rights, which are basically warrants or options attached to the stock, currently trading as a NASDAQ. The big story here comes from item 5.02, which deals with changes in the company's leadership and compensation. On the 10th of June 2026, RPAY held its annual stockholder meeting. During this meeting, the shareholders approved the third amended and restated Omnibus Incentive Plan. This plan was already approved by the Board of Directors back on the 30th of April 2026, but it needed the green light from the owners of the company. So what does this new plan do first? And this is the most significant part. They are increasing the number of shares available for these incentive awards by a whopping 25,000,000. This means the company can issue a lot more stock to its employees, executives, and possibly directors in the form of bonuses, stock options, or restricted stock units. This is essentially a way to motivate and retain key talent by giving them ownership in the company. Second, they've extended the life of this plan all the way out to the 29th of April 2036. This gives them a long runway to use these shares for compensation purposes. Now, the total number of shares of RPAY's Class A common stock authorized for issuance under this program is a substantial 24,726,728. Keep in mind, RPAY's current market cap is around $297 million, with a stock price of about $3.37. This means those 24.7 million shares represent a significant portion of their total outstanding shares. Depending on how these new shares are issued, it could lead to dilution for existing shareholders. Item 5.07 details the actual voting results from the annual meeting. It shows how shareholders voted on various proposals. The first proposal was the election of directors. A slate of directors including Paul R. Garcia, Marion Goebel, Peter J. Kite, John Morris, Mnet Rios, and Richard E. Thornborough were up for election. Looking at the votes for Paul R. Garcia, he received 50,647,150 shares voted for him, with 28,603,800 shares withheld. This indicates a decent level of support, but also a significant number of shareholders chose not to vote in favor. The same pattern holds true for the other director nominees, with shares voted for ranging from about 50.2 million to 50.7 million and shares withheld in a similar range. Marion Goebel received 50,731,863 shares voted for. Richard E. Thornborough got 50,195,764 shares voted for. Ultimately, all nominees were elected. This means the board composition remains largely the same, supported by the majority of votes cast. Next up was Proposal 2, an advisory vote on executive compensation, often called a say on pay vote. Here, we see 36,772,506 shares voted for the executive compensation. However, a substantial 32,764,335 shares were voted against it. There were also 9,714,109 shares that abstained. Even though a significant chunk of votes were against it, the compensation of the named executive officers was approved on a non-binding advisory basis. This indicates some shareholder dissatisfaction with pay packages, but not enough to reject them outright. This brings us to Proposal 3, the approval of the Omnibus Incentive Plan we talked about earlier. The vote here was 46,757,481 shares voted in favor, and 23,566,539 shares voted against. This proposal passed, meaning the shareholders have given the green light for that significant increase in authorized shares for incentive programs. This is a crucial decision for the company's future ability to reward its employees. Finally, Proposal 4 was the ratification of the Audit Committee's appointment of Grant Thornton, LLP, as the independent registered public accountant. This received overwhelming support with 84,658,413 shares voted for. Only 445,177 shares voted against. This means Grant Thornton will continue to be RPAY's auditor for the current fiscal year. This is pretty standard procedure and usually gets strong approval. Item 9.01 lists the exhibits filed with this report. Exhibit 10.1 is the third amended and restated Repay Holdings Corporation Omnibus Incentive Plan itself. It was incorporated by reference from their proxy statement filed in May. Exhibit 104 is the cover page interactive data file, which is embedded within the inline XBRL document. This is for regulatory and data processing purposes. The report is signed by Tyler B. Dempsey, the General Counsel and Corporate Secretary, on behalf of Repay Holdings Corporation, dated the 12th of June, 2026. Now, looking at this filing, the most significant takeaway is the shareholder approval of the expanded incentive plan. With RPAY's market cap around $297 million and a stock price of $3.37, the addition of 2.5 million shares to their incentive pool is substantial. This gives the company a lot of flexibility to grant equity, which can be a powerful tool for attracting and retaining talent, especially in a competitive tech and software market. However, it also means existing shareholders could see their ownership stake diluted if these new shares are issued. We've also seen some recent news about RPAY amending its credit agreement and shortening its term loan maturity, which suggests they are actively managing their debt. There is also chatter about shareholder backlash over director elections. Though the votes show the directors were re-elected, this hints at potential underlying governance concerns or disagreements between management and some shareholders. Considering RPAY's market position in the payments technology sector, which can be quite cutthroat, this ability to use stock as a compensation tool is important. We've seen companies like Kodak, which did a 1-for-20 reverse split in 2021, struggle with stock performance and dilution concerns as they tried to reinvent themselves. While this isn't a reverse split, the potential for dilution from this new incentive plan is something RPAY holders should monitor closely. For a company with 486 employees, granting 2.5 million shares would average out to roughly 5,000 shares per employee if distributed equally, which is a significant amount. The risk I'm watching is the potential for significant dilution if these new shares are issued without a corresponding increase in company value or profitability. My biggest concern is how this increased share count will impact earnings per share for existing shareholders over the long term. What I'm actually looking for is to see how management utilizes these newly available shares to drive growth and shareholder value, rather than simply increasing headcount or executive compensation without clear returns. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.